Ladies and gentlemen, please turn your attention to the stage as we begin our session.
Good morning. Thank you for being here. I know it's really early and some of us are with jet lag and everything, so we do appreciate you being here. Now, they say that the 21st century belongs to Asia. Nazir disagrees, but we'll get to that slightly later. A region of 5 billion people, that's more than the rest of the world put together. And according to PwC, China and India will be the top two economies by 2050 based on PPP, purchasing power parity. But the story of Asia goes beyond just India and China. We have Indonesia, poised to be the fourth largest economy by the mid-century, by 2050. We have Southeast Asia, collectively 10 countries, 600 million people, a growing middle class, a young population with an average age of just 29 and all eager to embrace technology. We have Japan, that some say is finally waking up after a 30-year slumber. Abenomics, some say it's showing signs of some success. We have Korea, which is possibly one of the most connected countries in the world. Almost all households are connected with possibly the fastest internet connection. So, given all the uncertainties in Europe, given Brexit, given the US-China trade war, despite some optimism a deal will come through, it could go on for some time, Asia could be the region where you'll find new business opportunities and opportunities for expansion. The thing is, given the diversity, both in terms of politics and economics, there are also lots of challenges. So beware when investing in Asia. So let's get some insights, perspective from our panelists today. I'm really honored to have Yong-Hyun Kim, CEO of Hanwha Asset Management, Nazir Razak, Chairman, Ikhlas Capital. Some of you may know him because he was chairman of CIMB for a very long time. We have Enrique Razon, Chairman and CEO, International Container Terminal Services, also the CEO for Bloomberg. You must know the resorts and casinos. And we have Mitsumaru Kumagai, Executive Managing Director and Chief Economist, Daiwa Institute Research. Yong-Hyun, perhaps we can start with you. Give us some perspective on where Asia is right now since the financial crisis. I mean, it's had solid growth since then.
Yeah. I think the perspective that I bring to this panel is that we, as an asset management company, act as the investment arm for, in our case, our parent company, Hanwha Life Insurance, which is the oldest life insurance company in Korea, but other institutional investors in Korea, as well as retail. And from that perspective, increasingly, it's been important to have a good global asset allocation. And so from a very domestic Korea-focused allocation, we're increasingly trying to encourage overseas investments across different asset classes. And obviously that extends to investing in the United States, Europe, but also I think increasingly it becomes important to invest in Asia. As you look at what's happening in the various different economies, obviously the United States is doing very well, but a lot of other regions, Europe, and more developed economies in Asia are not growing as much. And so I think particularly Asia, but also Southeast Asia and some of these regions provide growth in your investment portfolio. And so having that angle is very important, as well as finding the individual deal opportunities to invest in what we call alternative investments. So real estate, infrastructure, private equity, early stage venture type of investments as well. And so from that perspective, we think it's becoming increasingly important to include Asia in the global asset allocation.
And of course, Asia grows from 5 to 7%. What excites you the most, Nazir, when you look at the region?
Well, I think if you look at Southeast Asia in particular, you're talking about 3 trillion economy, 650 million people, median age of 30, and a region that's well located, It's multicultural. It causes difficulties, but at the same time, it means that we connect very well with the rest of the world, whether it be it Europe, be it the US, and be it the Middle East in particular. I think the ASEAN integration story is also very nascent. There is a lot of opportunities as the region comes closer together into one economy. I think what we can come back to later is it is, however, very, very tricky to navigate ASEAN because it's still 10 economies and so on. And let me just clarify, when I think you had too many coffees when we were talking yesterday. When I said it's not the Asian century, what I meant was I don't like the term Asian century. I think it means it suggests that it's not somebody else's century. I think it should just be a world century, so we all have the shared prosperity, that's all.
And when we talk about the region, it's been pretty resilient. We have the US-China trade war. Yes, exports have been impacted, but resilient nonetheless for Asia. What do you see in terms of maybe trade movements and so on?
Well, in the ASEAN, Southeast Asia, in particular, I think the Philippines is probably the most resilient, since over 70% of GDP is consumer-driven. And the Philippines, more or less, was not that heavily impacted in the financial crisis. And we're entering an age now of massive infrastructure investment. And I think the other ASEAN countries are doing the same. I know you mentioned that Japan has been in slumber for the last 30 years, but if you look at the Japanese people, they seem to be pretty satisfied. So I guess from an outsider's perspective, that may be the case. But inside the country, I don't think that's the case at all. No? And Korea, of course, has been quite volatile in the last few years, but we have investments in Korea as well. But I think Asia as a whole has to be treated as not as Asia, but the individual countries. Since all countries, we do business in 30 countries. Like in Africa, we're in several countries, but these are all different countries. It's not just Africa. No? So.
Mitsumaru?
Yes. I'm honored to be here, and I'm a chief economist of Daiwa, and my name is Kumagai. Kuma means bear in Japanese, but I am not bearish about the Japanese economy and the stock market. I'm basically bullish. First of all, I would like to mention that this session shares a very important moment with the people of Japan. Just a few minutes ago, on May 1st, Japan entered a new era, changing from the old Heisei period, the new Reiwa period. And some economists say that this event pushes up Japanese GDP by about 2 trillion yen. It's $20 billion, and it is 0.4% of GDP. And this is being celebrated with 10-day national holiday. And the Japanese government is working on a new program of work style reform. Even so, here I am working. Anyway, I will remember this moment for the rest of my life. And today, I would like to explain how strong the Japanese economy is.
How strong is it?
Yes, okay. Before that, I'd like to ask two simple questions. What is the strongest bond in the world? Raise your hand if you know the answer. James Bond. And what is the strongest and most sustainable economy during amongst major advanced countries? The answer is Japan. Please show the slide, page 1. I think Japanese economy has great strengths. First, our society is very stable. The meaning of new era, Reiwa, is beautiful harmony. In Japan, problems such as income gap and health are limited. This is the first point. And second, there is strength in corporate longevity. In Japan, 26,000 companies have survived for more than 100 years. This corporate longevity will be needed because sustainability will be very important element in the future. And number 3 is our long history and capability of making things or manufacturing. And also, the fourth point is that the Japanese consumers and customers are very demanding. This is also a strong point. And number 5 is Japanese culture. In Tokyo, there are 230 Michelin star restaurants. The number is the highest in the world. In Paris, there are only 113. And number 6, Japan is often called an advanced country with issues. If we can overcome the problem of an aging population with a declining birth rate, we can export the business model to other countries, especially to other Asian countries. So, in conclusion, my name is Kumagai, but I am not bearish about the Japanese economy. I'm basically bullish.
We'll address the issue of the aging population because that remains a huge problem for the country. Now, looking at the other regions, if you take a look at ASEAN, for instance, a very young population, a millennial population, what opportunities are there? Technology has changed the region tremendously.
For sure, and I think that what we have seen in the past 3 to 4 years is the arrival of ASEAN unicorns, and they have a fantastic story, a fantastic investment story if you look at the Grabs and so on. And on top of that, if you look at the way Grab has managed to essentially control ASEAN against the Ubers, if you like, that is a tremendous vindication of the potential of our young generation. Obviously, one needs to understand the new millennials if you want to play them as a consumer group. For instance, they're different to you and I. You're older than me, but you and I. And I think that in terms of the easiest path is obviously to focus on the digital economy and how you can invest in them to access this new generation.
How do you capitalize, Ricky, on the young population in the region?
Well, the young population has their own habits and tendencies, which needs to be understood. But the young population also will get older in a while, no? And will probably fall into the category of a little older population now. And they're much more adept at technology. And these are the things that you have to understand. But it also depends what business you're in. No?
How is it impacting your business?
Not much, because we're in the handling business, we're in the infrastructure business, and everybody has to use this infrastructure, no matter how young you are. You know?
But
we're not in the technology business per se, we're a user of technology. So we like technological developments as it helps us in our business. No?
And in terms of, from an investor perspective, how do you play the Asian story?
I think just touching on the point about technology, I think in Korea, the whole digital transformation is oftentimes referred to as the fourth industrial revolution. And really, I think everyone is very concerned that despite having been really a leader in terms of having widespread broadband connections in Korea, whether we are sufficiently prepared for the next kind of transformation that's happening. And so there's a lot of concern plus excitement about what potential that brings. One area that we're focused on, just being a financial service company, is fintech, for example, and how that impacts more developed economies like Korea or Japan, but also how that impacts Southeast Asia and how you can provide for the kind of banking of the previously unbanked through these type of technologies. And so that's an area where we're very focused on trying to find new startups or investment opportunities, or to work with established players. I think it becomes very important to really work with partners, consortium members to create the ecosystem to develop these types of opportunities. So we're very focused on kind of an open innovation type of platforms that are and will be forming throughout the region.
How ready is the region? Because it does seem like the region is leapfrogging based on mobile payment system and so on and so forth for those unbanked. How ready is it? How much potential is there?
Oh, I think the obviously it is huge potential, but I would like to flag is that again, you know, you innovate, you look at ASEAN, 650 million people, and so on and so forth. You get very excited, but you have to be very careful how you roll it out. I gave you an experience when we launched at the bank, launched our digital bank in the late 2000s. We were very excited, and I decided that the best way would be to have a mascot, and the mascot would be an octopus. And he was so cute. So I then made decisions that Thailand, Singapore, and Indonesia, Malaysia launched the octopus. So we launched throughout. Then I realized that in Indonesia, octopus means corrupt politician. And so we had to take back all the octopuses, one, but there was also more on the story. I asked the question, why none of the 12,000 people who work for me in Indonesia didn't tell me? Yeah, so one has to be careful with these kind of nuances of doing business in Southeast Asia.
So what kind of growth do you see? I mean, based on what your observations so far, what kind of growth can be provided from the adoption of technology?
I don't know. I mean, I think it's almost unlimited, really.
Because there are figures out there saying that in the next 5 years, there'll be at least 10 more companies in the region valued at more than $1 billion.
Yeah, I mean, that's what Bain talks about. But I think we don't know what technologies. Every industry, I think, has a potential to be disrupted. So 10, maybe more. I think the point is the region has innovative people. The region has large markets. The region has very well educated people. The region has very good digital infrastructure already. And so I think the prospects are very, very good. My only caution is think about it as different markets. You have to be careful.
I'd like to mention IoT. Is it possible?
Yes,
Okay.
please.
I am convinced that the Japanese companies will win if IoT is widespread, because we are very strong in the manufacturing sector. The digital-related market size in Japan is expected to increase to $220 billion in 2020, with an annual growth rate of 9%. Of that, IoT market size will increase to above $100 billion in 2020, with an annual growth rate of 16%. Especially in the industrial robotics sector, among the top 10 global companies, 7 companies are Japanese. The youth unemployment rate in Japan is around 4%, the lowest level among the G7 countries. In the United States, it's about 10%, and France is above 20%. From the viewpoint of culture, we are basically very open to introducing robots. I would like to emphasize that the tide is changing in the world's high-tech sector, and this is a very positive factor for the Japanese companies. Previously, the main field of the high-tech sector was virtual worlds, such as games. At that time, speed was the most important thing to acquire the de facto standard. It was okay even if a product still have a few bugs in the first stage. Since Japanese companies are slow to make decisions, we have lost competitiveness. However, in the future, the main field of the high-tech sector will move to more serious areas, which have relationships with human lives, such as autonomous cars. We Japanese are slow to make decisions, but we are honest, and our level of technique is very high. So in the new stage of high-tech sector, I'm convinced that Japanese companies will win.
how much potential is there for foreign investors to be in these markets or sectors that you mentioned, like the IoT, robotics?
Yes, these days, Japanese market is getting more open and open. Because Prime Minister Abe is trying to open the Japanese market and the Japanese economy.
How successful has he been?
So I think the IoT sector is very attractive for foreign investors, I think.
Ricky, you track. Sorry.
Sorry, isn't it still very difficult for foreigners to work in Japan? And doesn't that limit the potential of Japanese companies not to be able to, have a more multicultural leadership in the companies?
However, these days, Japanese companies and the Japanese government is changing gradually. We set the stewardship code or corporate governance code. And the independent directors, about 90% of company has more than 2 independent directors. So these days, Japanese companies are changing gradually. I think it's a very good factor for the Japanese economy and for Asian countries. I think.
Is it still slowly, or
Slowly, but changing. We are changing.
Over 200 years. That's probably the pace when it comes to
the
Japanese change.
The pace is important. Ricky, I mean, you track movements of trade, cargoes, and so on. I mean, with the recent U.S.-China trade war, how did that shape trade movements, and in what way did Asia benefit from it?
Well, I think there was some manufacturing that has been moving to places like Vietnam and Thailand, possibly India. We haven't seen much of this where we're based in the Philippines. So. But the impact, we don't see much of an impact in our markets because, of course, the Chinese are looking for other markets, given the tariffs being imposed on some of their goods. So that sort of increases trades in other areas. So in Mexico, where we have a very large presence and large business, we've seen quite a bit of benefit there.
Do you see supply chains being tweaked further in preparation for possibility or of tensions later on?
If you're a major car company, life is becoming very complicated for you, that's for sure. So it depends on what industry. But in certain areas where products like cars or other electronics, where components come from 200, 300 different suppliers, the supply chain has become very complicated with the trade war.
I'm trying to take a look at the growth areas for the region. I mean, with a population of 5 billion people, ASEAN alone, like you said, 650 million, I think. Consumers will be a good area to be focusing on. What kind of potential is there, and how would you play the consumer story in ASEAN?
Me.
ASEAN.
No, I think the consumer story, there are many ways you can play it. And if you look at the consumers, one is to profile them and so on and so forth. But one thing I'd like to point out is what you can look out for is actually companies that can go beyond the domestic markets. If you look at this Indonesian company selling coffee, it's now become, over 3 years, more or less the number one coffee in Philippines, Kopiko. And you can replicate that kind of story across us and find the local champions that can be the regional champions in the consumer sector. I think that's a very attractive investment proposition.
I think when you look realistically about how does an investor access these opportunities, and so obviously the public markets is one, or you can get access to these type of opportunities through more private investors, whether that be private equity or venture funds, etc. When you look at ASEAN, for example, in terms of the public equity markets, it really comes down to 5 markets: Singapore, Indonesia, Malaysia, Thailand, Philippines. We're also very excited about the opportunities in Vietnam, and we also have launched and run a Vietnam fund, but that's a frontier market, and just the size of the market is very different. And so you have to be careful about how you approach those type of markets. We've also looked about trying to think about creating a fund that focuses on fourth industrial revolution companies in Asia. And in kind of looking through that, it really, it was difficult to, if you focus on China, Japan, Korea, and then you don't have too many high-tech companies when it comes to ASEAN. And so I think for the most part, the digital transformation opportunities tend to be, at least in the public markets, more in the Northeast Asia. And then I think there are still the very consumer-oriented investment opportunities in the ASEAN, at least on the public equity side. And then on the private markets, I think venture investing is an area that is starting to ramp up with increased investors interested in investing in Asia. Certainly very far behind what's happening in the Silicon Valley, but it's increasing, and I think it'll be an important source of capital that'll get to these companies, from an early stage, perhaps not quite seed stage, but at least Series B, C, and onwards. I think we're hoping that there's additional capital that'll get to these companies so that they can grow.
Yong-Hyun was talking about the lack of high-tech companies in the region. I mean, apart from North Asia, Southeast Asia perhaps lagging behind. Do you see that changing at all? Do you see perhaps Southeast Asian companies playing catch-up anytime soon?
Yeah, I think the unicorns are growing very, very fast, as we said at the beginning.
Limited numbers,
I think
though.
they have limited numbers still. But, private equity and venture capital is still very new in the region. I think what we are seeing over the past couple of years is finally, after a few false starts, that industry is taking off. And I think we saw a chart yesterday somewhere where in the US, the curve has crossed, right, in terms of public companies and private companies. And I think you're going to get that in ASEAN. A lot of promoters I talk to are really very tired of being in public markets, all the pain of being listed and not realizing the true value of your company on those markets, right? So I think that the space to play is really the alternative investments. And in that, I think, the idea that you can use alternative investment vehicles to actually create cross-border opportunities in ASEAN, I think that's the future.
We were talking earlier about the potential from the younger population, the millennials and so on, but there's also an aging population issue within ASEAN, the likes of China, Japan, Korea, increasingly, Singapore, certainly. What's the potential? What opportunities are there in playing within the aging population space? Healthcare could be one.
I think so. Japan is often said a country that has problems, advanced problem country. So if we can solve that kind of problem, especially in the area of healthcare or environment, we can export that technique or business model to Asian countries. So we Japanese have advantage because our population is declining. It is a big advantage for the Japanese economy.
In the case of Korea?
In the case of Korea, I think it's similar. Obviously, I think it's more widely known that Japan and Korea are one of the fastest aging societies right now in the world. I think what people don't know quite as much is that China is not that far behind us. And interestingly, despite Vietnam being one of the youngest economies with, I think, the average age being slightly under 30, when you roll this forward 20 years from now, Vietnam also becomes one of the fastest aging economies. And so they will, in a matter of 20, 30 years, they will have to go from a very young, vibrant economy to an aging society. And so I think this is a topic that is relevant for all of these Asian economies.
And in the Philippines, we're number one at making babies. So we're not going to have
That's
that
an
problem
advantage.
for the foreseeable future, since our growth rate is huge with average age of 23 right now.
But jobs is an issue in the Philippines.
Jobs are an issue. That's why we export people, because we produce more people than we produce jobs over the last 30 years. That's why we have 12 million Filipinos working abroad who send money home and fuel the economy, similar to Mexico. No? But to go to the bigger picture, I mean, ASEAN region has probably had the highest economic growth rate in the last 20 years. I don't see anybody who hasn't taken notice of that. And
You're trying to keep them away.
Philippines, I'd say Philippines, Vietnam, Indonesia, India, China, we've all grown over 6% for the last 10 years straight. Solid, no?
Do you expect that momentum to persist?
Well, as we don't know what the future holds, but we think even if it slows down a little bit, 4 or 5% is still much better than what's happening in the rest of the world. So I think it is what it is. You know, if you're not going to Asia and you're not investing there, that's fine with us. I mean, it's your problem. I mean, we like it the way it is. You know, I don't work for the government, so I'm not really looking to attract investment. You know, but the growth has been pretty solid. Liquidity has increased dramatically. We're not at such a big disadvantage anymore on cost of capital basis. So I think
How are you expanding your own business?
very, very quickly, no, into the infrastructure space.
Can you give us some scope?
Into the entertainment, gaming space. We're investing heavily in water, in power expansion, more ports. Problem with some of the Asian countries is very hard to penetrate. Barriers to entry is very high, which makes us very happy, you know, since we're already in there. But yes, I mean, you have to work at it.
Let's talk about some of the challenges. Nazar hinted to the fact that ASEAN alone, 10 countries, you got to treat each country differently. Therein lies the challenge of doing business in the country, because regulations are different, cultures are different, population profile is different. The biggest challenge in doing business in ASEAN would be all of the above.
Politics.
What about the politics?
Now, politics is something you need to understand. You need to understand the contours of power in every market. You need to understand how business works. And you need to understand, you know, where the tensions are in society. I think any business needs to understand that before they invest in each country. And also have mechanisms to monitor that to make your decisions as you go along.
And it's a tricky situation for the region right now. We take a look at Southeast Asia, for instance. Elections abound. We just had elections in Thailand, Indonesia. No results as yet. Indian elections coming up. Philippines is coming up as well.
Although not for president, but for parliament, Congress, no, and local government.
How should investors view the challenges of trying to make sense of the political situation in a country? If they take a longer term perspective, should they just jump in when they see an opportunity? They tend to be sidelined and wait for greater clarity. Is that the right approach? What's the right approach to dealing with a political situation?
If you're going to wait for great clarity in Asia, you're going to wait forever. I mean, that's one thing is constant. It's never really that clear in political situation in most Asian countries. But one way is to invest the time and resources to understand it, or get very good local partners.
Yeah.
You know, I think this is not a problem that's just unique to Asia, frankly. I think when you look at the investment opportunities globally, the biggest unknown and biggest risk, I think, is the geopolitical risk and the macro risk and how that'll impact the various different economies. I think when you look at just within Asia, you obviously have situations between U.S. and China trade war and how that impacts. I mean, some may benefit, but others will lose from the outcome of such situations. You know, you have the situation with North Korea impacting South Korea and some of the neighbors there. You also have disputes between China and basically every neighboring country, I believe. Philippines, Vietnam, Taiwan,
South China Sea.
and how those kind of potentially flare up and what impact they have. I think that at the moment is probably the biggest risk. And really, from an investor's perspective, I think the only thing you can do is make sure you diversify. Spread your investments across different economies, different sectors, different geographies.
Yong-Hyun, is it too early to be thinking about the possibility of opportunities arising for a reunification of the two Koreas?
From an investment perspective, yes, clearly way too early. I think the developments in terms of having a discussion that's ongoing is very positive. However, realistic or unrealistic, the prospect of real peace and real cooperation with North Korea, that frankly will have to be seen. But at least the fact that North Korea is not shooting missiles every other month is a positive.
So too early to be playing or thinking about it.
And just look at the political situation in Europe as well. You have this pendulum swing between extremes now.
So
It's happening here as well in the United States. So you're seeing massive change in policies when over the last 30, 40 years, policies were more or less steady, right?
what do you make of the political situation in the Philippines? I mean, people are pretty divided about President Duterte, for instance, and what his policies mean for the economy.
I don't know who's divided. We may be a bit divided, we think, but he has a 84% approval rating. That doesn't sound that divided to me, no?
Investors don't quite view it in a positive, some of the policies at least don't view it in a positive light. I mean, should that be impacting sentiment?
It does, as far as the markets are concerned, the equity markets especially. No? But it's very hard now to find a very positive political situation globally. As we speak now, there's a coup going on in Venezuela. No? I mean, we just had one which affects us directly, the company in Sudan 2 weeks ago. So it's you're getting some crazy people elected in Europe.
On balance,
and,
you think?
and other places as well. On balance, politics globally is pretty screwed up. You know, I mean, there's no two ways about it.
No, but you mustn't get caught up in it. I think that's the point. If you look at ASEAN, for instance, don't be on the high horse and sort of say every country will eventually become democratic and so on. Forget it. You know, we will all have political systems that the population, wants. And I always look at Cambodia. I mean, people complain about how authoritarian Hun Sen is, but my God, in the 70s, there was genocide. 2 out of 5 million people were killed, and the world ignored them. So today they've got 7% growth. More and more people are coming out of poverty. I think you have to accept it. But when you invest in Cambodia, I wouldn't, get linked to politics. And a lot of business has some political linkages, so you just have to be careful.
No, if politics really drives your investment sentiment, the only place you'll probably be able to invest is in Japan, which is one of the most stable, politically stable.
But it is still disconcerting. People do view the flip-flopping of policies in Malaysia, for instance, as an issue.
Well, I think Malaysia, you must, put it in the context of a democratic revolution. The accent is on the word revolution. We had a democratic revolution. We were the first change in government in 61 years. And with that, you had wholesale changes in the cabinet, the ministers. You had wholesale changes in the service. You had wholesale changes in the GLC. So there's a lot of people learning their new jobs, one. Two is you had a new government that came in with a manifesto constructed by oppositionists with, the overriding objective of winning the election. Yeah, and so it was a manifesto that was not easily implementable. And what you see is they try to implement and they get pushback. So you get the flip-flops. But overall, I think it is too soon to judge a government having just completed a revolution a year ago.
Are you optimistic that things will settle down?
Well, I think after 12 months, which is next week or so,
May?
Yeah, 9th of May. I remember you interviewed me on the 10th, yeah. And I think it's a good time for the new government to kind of reflect on the past 12 months. And I think we're starting to see that, because in August last year, the things Mahathir was saying against China, new colonialism, debt driven diplomacy. That's what he was saying. Last week he was at the Belt and Road Conference.
Yeah.
Signing off on previous deals that he had
that have been reviewed,
that he had shelved and reviewed. So I think he's becoming more pragmatic, and I think possibly he will then change his people who are not performing and some of the policies that don't work. So I think maybe the worst is over.
No, I think one area the politics really impacts investment is on infrastructure. I think when you look at Korea is a situation where private sector money, particularly long-term money, for example, life insurance company money, invested heavily over the years in the infrastructure development opportunities. And so almost every bridge, toll road, power plant, sewage system, whatever, there's a lot of private money that went in. But for infrastructure investments, these are 20, 30-year type of investments, and you have to have the confidence that the policies in place today will be honored over that 20, 30 years, that the schemes are predictable, reliable. And when politics become volatile and new administrations overturn policies of the prior administration and things like that, it becomes very difficult as a long-term infrastructure investor to invest, which when I look at ASEAN, the thing that stands out is the need for infrastructure. As much as there's so much potential with the young population and the consumer opportunities, I feel like it's held back by infrastructure, lack of or slow infrastructure development is holding that back.
Case in point is the Philippines.
Yes.
I'll come to that. Go ahead.
I think one of the most important problem is the trade friction between China and the United States. And please show the slide on page 15. I think in general, China is disadvantageous because of 4 reasons. The first reason is the US economy is far bigger than the Chinese economy. This is the first one. And the second one is the share of manufacturing in the total economy. United States only 10%, China 30%. And the third reason is that proportion of GDP accounted by exports to other country. This is the upside potential of sanction. And US 0.7% and China 3.6%. And the fourth one is the Chinese economy is a processing trade type economy. For those 4 reasons, Chinese economy is at a disadvantage. On the other hand, please go to the next slide. China has 3 choices against the United States. Number 1, surrender. Number 2, counteroffensive. But they don't choose that kind of options. And China chose number 3, a game of endurance. There are 2 reasons. The first reason is boomerang effect. In the third phase, US economy will deteriorate more than China. So IMF says that's the same thing, that if the time goes, the situation for the United States will be worse. And also limitation of democratic countries. Trump might be re-elected, but the term will be 6 years. So for these reasons, China would like to choose a game of endurance. And in conclusion, I think this trade friction problem has 2 tiers. On the surface of this problem, I think the problem will be settled sooner or later, by which I mean the trade deficit problem. On the other hand, in the bottom line of this problem, it is the war between communism versus capitalism. I think this problem will continue for about 20 years or so. So I think this problem will be very severe for the Asian countries, I think.
What does it mean for Japan?
For Japan, yes, it's also very severe for the Japanese economy.
What's the worst and best case scenario for Japan?
Yes. I think Japan has 4 options against the United States. Please show my slide, page 11. There are 4 choices. Number 1, do what they are told. And the second one is fight it head-on against the Trump administration. And we don't choose these options. And number 3, isolate the US through TPP-11 or the EPA with EU countries. We adopt this third one. And also, fourth one is very important. Adapt a fourth way and create a counterweight to China with Japan, US, EU cooperation in the field of intellectual property rights or forced technology transfer and also industry subsidies. In that field, I think that to establish the strong relationship between Japan, US, EU, this is very important for Japan.
I want to pick up, thank you for that. I want to pick up on the theme of infrastructure earlier, how Yong-Hyun was saying that there's a need for great infrastructure, and that's possibly what's hindering growth in this part of the world, in Asia. Philippines lacking in infrastructure in a huge way. What's really hindering?
Well, what's really hindered the Philippines infrastructure is the culture in government of doing nothing, really, for the last 20, 25 years, no? And we're seeing a lot of activity in the infrastructure area, which is the most vital to us, but still nothing really getting traction. There's no momentum yet. The locals are the ones doing most of the investment, plus bilateral deals with Japanese, in terms of the subway with the Japanese government, and some with the Chinese government. But this really needs to get started. And we're still at that point of about to get started, which we've been in
It's been about it for the last 10 years.
Forever, yes.
Yeah, I didn't necessarily want it to be kind of a negative. I mean, I think
it is a negative, though, if it's done to the way
I
of
think
growth.
the economy is growing very fast.
But imagine how much faster the economy
Probably
can
another
grow.
2%.
It's the fact that it could be even faster with these type of investments. I think is the point that I think is better to focus on, and then and so there are, I think, ways that you don't have to necessarily depend on kind of government guaranteed type of infrastructure projects, and so I think that's where private equity, venture funds, and private investor funds, whether that be real estate or infrastructure funds, if they can find ways to take advantage of the opportunities in more perhaps smaller scale, I think the role of those type of investors will become increasingly important.
Your take on it?
Well, I mean, Malaysia doesn't really have an infrastructure problem, I think, and that is reflected by the fact that we've had certainty of government, and government has been very focused on infrastructure building. And one thing I have been telling the other ASEAN governments is that one of the most important things is to have a capital markets to support the development of your infrastructure. Last thing you need is infrastructure projects funded by foreign currency loans, right? And one thing Malaysia did before, as it built its roads and so on, was to develop the local currency bond market, and that's been hugely successful. Yeah. So you can borrow long term in local currency. That's very much key, I think, to the infrastructure development. I think the rough estimate is 180 billion US a year is how much ASEAN needs to.
How comfortable is the region with Chinese money in infrastructure? Japan must have a perspective.
Chinese money?
Yes.
But I think Chinese government should be fair to all the countries. So from the viewpoint of political games, political power games, I don't agree that Chinese money is good for many countries. So we basically don't agree with AIIB. We basically support ADB, Asian Development Banks. So the transparency and fairness of the operation is the key factor for the Chinese government.
Your take on it?
Well, there's a lot of suspicion on political strings attached to these loans.
How many countries are there with as deep pockets as China?
Exactly. You've had some bad experiences in Africa and Latin America. Also on the side of the Chinese, I think Venezuela has defaulted on 40 billion in loans to China, and I don't think the Chinese are ever going to see that money back. No? So it really depends on. I think if it's done in a transparent way, the terms are commercial, without any geopolitical or political strings attached to it. I think their money is as good as anybody else's.
No, I think one thing we were saying a few years back was the whole Belt and Road initiative came at the same time that Xi Jinping was having his no corruption drive, right? And we kept saying, what you should do is build in the no corruption in the Belt and Road, but it wasn't. Okay, so that's why it was quite interesting to listen to Christine Lagarde the other day, because she was talking about what Xi Jinping said at the BR conference, and apparently he several times repeated the word sustainable and acknowledged that the structure of those deals has to be sustainable for the country concerned. Yeah. So let's see how it goes from here. Malaysia, as I mentioned earlier, had this renegotiated East Coast Railway. The original price was 65 billion ringgit. It was renegotiated by the new government down to 44 billion ringgit. It's a massive drop. Yeah, they changed the alignment a bit, but it's still a massive drop. And it shows how inflated the original project was. Why? Big question mark, right? But I think every deal must be negotiated aggressively, must be very transparent, and then I think China is really the only game in town.
Yeah.
Yeah, and again, just to go back to the Philippines, we haven't even started this program, and they're already squabbling over all the loans. Typical Philippine style, no? So we still have, I mean, it's still to be seen whether any of this actually materializes, given the way we normally handle these type of things.
Do you think infrastructure in the Philippines will take off? I mean, for a very long time, we're talking about a new airport, and the new airport is still quite a distance away.
All we do is we just need an airport, and that's the number one infrastructure project that we need the most, no? And it's still nowhere. But countries don't develop all at the same pace. Eventually, we'll get there.
No, I think if you take a look at perhaps what's happened with trade with China, obviously I think everybody has grown a lot by supplying goods to China, and as the U.S.-China trade conflicts have been going on, I think if you in a lot of the kind of private dinner discussions, let's say among others in different Asian countries, I think the feeling is that there's a little bit of feeling that China hasn't been the best trade partner when you look at that over time, and there's support or understanding as to perhaps why some of these types of trade conflicts are being put into place or happening today. And I think people, to the extent you can afford to reduce your dependency on China, I think some feel like this is a good opportunity to reduce your dependency. You clearly have to trade with China, but I think long term, they haven't necessarily been the most reliable or good trading partner. And so when you think about taking infrastructure money from China, that's very long dated and very critical to your economies, I think you have to think about what that might mean in the future.
Just one question for everyone before I open the discussion to the floor. What's been the most misunderstood thing about investing in Asia? We can set the ball rolling. Who wants to start? Yong-Hyun, why not? We go down the line.
Most misunderstood. I think one of the things that's changing is that I think emerging markets, and in particular emerging markets in Asia, have been thought to be historically very volatile, and I think that's changing. I'm certainly optimistic that I think when you
That's
look
changing
at
because
the economies are growing. There's more consumer demand that's stabilizing those economies. So the currency fluctuations, the inflation, those type of risks that you worry about when global recession hits, I think that's less so. And so going forward, I think there'll be more stability in investing in Asia.
Nazar?
I think from my perspective, I think there's this assumption that we are this one economy, ASEAN. Actually, we probably have overdone that marketing, right? The reality is still 10 economies, and the reality is there's a lot of upside as we come together. And that's not quite understood yet.
So when investors deal with ASEAN, they have to start thinking they're dealing with 10 different countries.
Well, I think, they have to start thinking that there's a lot of upside as the economies integrate. We've gone overboard and talked about the ASEAN Economic Community 2015. Yes, we have Economic Community 2015, but actually the non-trade barriers are huge.
It's not going to happen anyway. It's
Yeah.
all talk. Yeah.
So as we do more and more business cross-border, there's a lot of upside. Yeah, I mean, this ASEAN Economic Community, our tariffs have gone down 99.5% since the year 2000. But the non-tariff barriers have shot through the roof from 1,600 to, I think, like 6,000 lines, right? So it's easy to bring down tariffs when you increase the non-tariffs. So the reality, there's a lot of constraints still. We're not an economic community, but we will do more and more business. And as we do more and more business, there are opportunities to profit.
ASEAN is just a name for an investor outside of Asia. There's really, ASEAN is nothing. For us, it's just a matter of traveling around without needing visas around the ASEAN countries. But other than that, it's like dealing with any other country. The non-stop talk over 30 years of integration, but nothing has been done by any of the countries. Philippines hasn't passed any laws to implement any of these so-called agreements. And it's really just gather around twice a year, do a lot of talking, but it's really just a word.
We're talking about opportunities here, Ricky.
No, so the opportunities are in the countries themselves. There's no ASEAN opportunity. You know,
No,
it's
I
Indonesia, it's Philippines, it's Thailand, it's Malaysia. There's no such thing as investing in ASEAN as it is.
So that's
it does
that's
not exist.
misunderstood.
Yeah, yes, yes.
Misunderstood?
It's Thailand, it's Philippines, it's Malaysia. That's where you have to go and invest. There's no ASEAN to invest in. You know? Unlike the EU, where it actually is the EU.
But Ricky,
Look at where
there are
the EU is now.
There are ASEAN platforms to invest in. So you can invest in companies that do business. And that's the most successful thing about ASEAN, which is since the economic community concept came in, trade actually went up and actually come down. Intra-ASEAN trade actually went up and actually has come down.
Which is
for
still very
reasons
small,
I mentioned to you.
a quarter of...
Yeah, and you talk about mutual recognition or professional and all that, that's rubbish. It doesn't work. Right? What has worked actually is intra-ASEAN investments. So you talk about conglomerates like Ricky's, like Ayala's, like CIMB, AirAsia. We have bought.
Yeah, we invest in each other.
We invest in each other. That's the successful part of.
But we invest in all the countries, looking at them as with their own identity, not as so-called ASEAN investment. ASEAN is just a junket, you know.
Many investors think that Japan and Asian countries are not front runners of SDGs, but this is wrong. I think Japan and other Asian countries are front runner in the field of SDGs. It is possible that Japan may lead the world in this area. The reason can be found in Japan's culture, its history, philosophy, and religion, which work well with the concept behind SDGs. Since ancient times, the Japanese have seen the sacred in nature and did their best to live life in harmony with nature. Japan's traditional capitalism valued what we called three-way satisfaction. This meant everyone involved should benefit from the deal: the seller, the buyer, and the good of society overall. The traditional Japanese merchants of olden times kept in mind the balance of profit spread between all stakeholders. Since Japan's traditional religion has many gods, we have a tradition of recognizing diversity. So I think Japan can be a front runner of the new age of capitalism.
On that note, let's open the discussion to the floor if there are questions. Just a microphone will come your way. Gentleman in front, please. Thank you.
The lights are really so
Yeah.
hard to see.
Can't really see. Yes, over here.
Good morning, everyone. Thank you for the delightful presentation panel. Jose Colazo from Asia Minute. The U.S. recently reorganized its overseas development with the BUILD Act, investing in infrastructure with their aid. I was wondering, what are your thoughts about it, since the panel discussed a lot about infrastructure, and what else does the U.S. has to do to ramp up its game in the region? Thank you.
Nazir?
I don't know about this.
Anybody wants to take this?
Well,
Haven't
the
heard of it.
U.S. body language is very negative towards the region.
We haven't seen any U.S. investment in
Yeah.
infrastructure, period. Except for in terms of the U.S. Navy and such. Huh?
You don't even have an ambassador to the U.S. To Singapore yet.
Yes.
It's extraordinary. It's 2 years on or whatever, is it?
They don't have ambassadors in 33 countries.
Okay.
Well, we have one in the Philippines. So
Basically, they've not heard of the BUILD Act.
I've not heard of the bill.
Money's not coming in yet.
When you talk about infrastructure, we just think about China. Yeah. And
Japan.
You know, we think about Japan once in a while. And we think about the AIB. We don't think the U.S. is interested.
no, haven't. Not a sniff.
I saw a hand at the back just now. Sorry, it's hard to see. Is there any other question? Come on, you can do better than this.
I guess we can end early then.
Okay, let's have final thoughts then. Let's have final thoughts. If an investor were to think about Asia, ASEAN, Japan, Korea, what would be the one big opportunity for them? Yong-Hyun.
I think we've talked a lot about ASEAN, and I think that's very clearly a very good growing area, and I'd like to come back to that. But when I think about, for example, just opportunities in Korea, one of the things that does stand out is that private equity investments in Korea have really matured and are taking off, I think. And so although, for example, the stock market index itself haven't been performing that well, I think there's a maturity in terms of the ecosystem, both in terms of the private equity investors, the LP community that backs it, the corporations, conglomerates are increasingly focusing more on their core businesses and actually selling non-core businesses. I think one of the statistics that came out was that of the total M&A deal in Korea last year, about 50 or 60% were private equity deals. That number is a huge jump from, let's say, 10 years ago. One other factor that's impacting that is that you have Korea has a very high inheritance tax, 50%, and if you're the largest shareholder, that goes up even higher to 65%. And so first-generation founders, as they become older, are increasingly turning to private equity investments. Similarly, but different dynamics, I think private equity and venture capital have very interesting opportunities in ASEAN. And so I think that is also an area where, in addition to possibly some of the public market opportunities, I think these private market opportunities will be interesting for the region.
The biggest risk?
Yes, clearly. I think the maturity of a lot of these funds, whether they can bring the operational improvements, I think that have to accompany these type of investments. Still I wouldn't say lack, but if the limited number of talented senior management that is available to run these companies post-investment, I think those are some of the things that are improving. But if you can get those things right, I think that'll determine the success of those type of opportunities.
Nazar?
Completely biased. I spent 30 years in banking, and I've jumped into alternatives, private equity, because I really think we are at the takeoff phase. Private equity in ASEAN is a new asset class, almost. Many false starts, as I mentioned earlier, but already we're seeing, 5 years ago we used to talk about maybe $4 or $5 billion a year in deals. Now we're talking average $10 to $12 billion dollars a year, and 2017 is $23 billion. This is the whole space, including the tech space. I think there's frustrations with real frustrations with the public markets. I think we also have the generational issues that Yong was mentioning. So I'm very bullish about this area, and fundraising has also been quite limited with the pure ASEAN funds, and I think that's about to change as well.
The biggest risk?
The biggest risk is politics. The biggest risk is politics because these are complex societies. These are the most diverse countries in the world, all in one place, right? And the ability for each government to manage their own countries, maintain peace, stability, etc. I think that's the most important risk.
Ricky, biggest opportunity, biggest risk?
Biggest risk is the global economy and human nature in general, and how people react to. I think we're living in a multi-bubble system right now, so I think that's the gravest danger. That's also probably lead to the greatest opportunity at some point. That's how I look at it. No?
Half full or half empty? I'm feeling that it's half empty for
I
you.
think both.
Yes. Please show slide 2.
We gotta finish the presentation, right? Must
yes,
be.
yes,
Yeah.
I think Japan and other Asian countries can become a front runner in capitalism. Please show page 2. Okay. No, before this one.
Lehman's.
No, page 2.
Page 2?
2.
One.
Next to 2. Yes.
One.
Considering the historical developments of capitalism shown in this chart, I believe if Japan and Asian countries can build a new model of capitalism, we can be front runners. This chart shows the history of capitalism. The history of capitalism has been the question of which is more important, investors and capital, or employees and people. The chart illustrates changes over time. The left side of the chart shows a leaning toward investors and capital, whereas the right side shows things moving in the direction of employees and people. The vertical axis is the temporal axis. The further down you go, the closer you come to the present. And the chart shows various stages of capitalism as it has developed through history, all the way to a new stage, capitalism 4.0. In this stage, employees and people begin to be seen as the source of added value because once artificial intelligence progresses, most simple labor will be replaced by AI, artificial intelligence. Ultimately, the source of added value for corporations is human creativity, the ability to think about the world around them in abstract terms, and their interpersonal skills. So I think if Japan and other Asian countries can establish a new model of capitalism, we are going to the right side. We can be a front runner in the new capitalism. And also, I am currently a member of Prime Minister Abe's Executive Committee on the promotion of an integrated resort, IR, in Japan. And we are going to establish 3 IRs in Japan. And there is a very big investment chance. So please invest in Japan. This is one of the biggest chances for you. And the biggest risk factor for Asian economies is, as I have mentioned, the trade war between US and China.
All right. On that note, ladies and gentlemen, I'm sure you'll agree it's been pretty insightful, pretty frank, candid. So as much as there are opportunities, be aware of all the loopholes and the challenges. It's not
one
just
thing I would like to suggest to everybody in the room is that for your own portfolios, you should allocate some portion of that to Asia, whether that's public equity, fixed income, or alternative investments. You might include less or more, but I think it should be part of your own personal portfolio, so hopefully something that you can act on.
Also miss the boat when it takes off. Ladies and gentlemen, thank you so much for joining us today. And thank you, speakers.
Thank you.
Thank you for attending. Please make your way to the next session.